Cui bono? Who benefits? That's the theme of a report released today from the Alberta Federation of Labour, and I'm going to talk to Gil McGowan, the president of it. The report is titled Exporting Profits, Alberta and Oil and Gas Workers Fell Behind While American Shareholders Thrive. Welcome to the interview, Gil.
Hey, Markham. Thanks for inviting me.
Well, this is it's a report whose conclusions we've been talking about for a while now, because we've had energy economists tell us that the oil and gas globally has not performed as well as other sectors, and investors are a little frustrated, and they've been demanding that the companies send more money or give more money back, more of the profits, more of the free cash flow to the investors. And we're essentially seeing that here, are we not?
We are. So we engaged a private economist to work with us, and he helped us crunch the numbers. And what we found was not frankly surprising to us, but we thought it was really important for Albertans to know. We've been seeing with our own members working in the oil sands and oil sands related construction. And, specifically, we looked at the two most recent periods of high prices for oil, and we compared the differences. So in the first period from 2011 to 2014, what we saw was an industry that was in growth mode. And so they took about 75% of their profits and plowed them back into the industry. And so basically, 75% of the profits went back into the industry. Only about 25% went to dividends and stock buybacks. You fast forward to the most recent period of high prices. We actually see record profits. But those profits are not being plowed back into the industry. So that, the way I characterize it is that what we're seeing is an industry that has entered a sunset phase. They've moved from growth and planting to harvesting. And that's significant for Albertans because this is our biggest industry, especially the oil sands. And I think Albertans should know that there's this big transformational change in the way that this industry is doing business.
And we've just seen significant layoffs at Imperial Oil, 900 workers a couple of weeks ago. This is the trend in the industry, and it's a trend in every mature industry that is struggling with profitability and so on, or even when they're doing well, because what they do is they use technology to increase labor productivity, and then they lay off workers. And we've seen that over the last 10 years, haven't we?
We have, and we're afraid that what we've seen with Imperial is just the beginning. So, the four big oil sands companies who collectively are responsible for about 85% of our production, that includes Suncor, Cenovus, Canadian Natural, and Imperial. We looked at what they were doing with their record profits. And as I said, in the previous boom, about it was 50-50, right? Between profits going to investors through dividends or stock buybacks, 50% to those things, and then 50% was what we described as a worker share, how much was spent on wages. But now it's basically 75% going to investors, 25% going to workers. And I think, from our perspective, I think it's particularly significant to point out that even though these are ostensibly Canadian companies, Suncor, Cenovus, Canadian Natural, and Imperial, they all have head offices here in Alberta. But 60% of their shares are actually foreign owned, and most of those are owned by wealthy Americans. So when we go from 75% of the profit share, sort of a 50-50 profit share between investors and workers, and go down to 75% going to investors. That's money that's literally leaving the province. So it's not going into workers' pockets. It's not going into the local economy. The amounts are not insignificant. So we crunched the numbers, but in the last period of high prices, 2021 to 2024, literally $58 billion of profits left the province. And that, obviously that's money that could have been spent locally. It could have been used to plow back into the industry. It could have been used to create jobs. And frankly, at a time when we're concerned about proper funding for core public services like education and healthcare, we've got a teacher strike that could use a few $1 billion to help settle it. That's money that's leaving the province with no real value for Albertans, and that's a big concern for us.
Let's talk about that for a moment because Alberta's oil and gas royalties last year were $19.6 billion. And I remember the discussions around the last budget where Premier Danielle Smith warned that if I think it was $68 a barrel, if the oil prices fell below that, there would actually be a deficit. Now we've got Alberta is projecting, instead of a surplus, projecting a deficit. And it looks like we may be in a lower price for longer than we expected. So even the benefits that do accrue to the government are not being handled well and wind up now the government's in deficit and it only exacerbates the problem.
Yeah, and I think for Albertans should understand what's happening with the royalty system. The big distinction when it comes to oil royalties, especially in the oil sands, is what we call pre-payout versus post-payout. And our royalty structure basically provides companies with a much lower royalty when they're investing, when they're building, when they're hiring. And so, the royalties when they're expanding are basically between 1% and 9% on gross revenue. Once they've paid off their capital cost, and that's what we talk about post payout, if it jumps from 20 to 25 to 40% of net revenue. And so that's what we've seen. We've seen almost all of the big oil sands projects move from pre-payout to post-payout. They're paying a much higher royalty. That's good for governments. It's good for Albertans who own the resource. But I'll say a couple of things about that. The first is even at post-payout, it's arguably lower than the royalty payout in other oil producing jurisdictions. Especially those where not only because we own the resource, Albertans own the resource, but we basically hire these private companies as contractors to help us get it out of the ground. In other places, they benefit both from the exploitation of the resource and the development. So if you look at around the world, we're actually, even with the post payout, we're getting much lower than the international averages. And then the second point is that yes, the royalties are coming in at a higher rate because we're in post payout. But what are our governments doing with them, especially here in Alberta? If we look at the current teacher strike, for example, we have the lowest spending per pupil in the entire country, and so that and we also have a healthcare system that is suffering from what most experts would describe as a short staffing crisis. So, so the money's coming in, but with this government, it's not being spent on the two things that provincial governments are supposed to have primary responsibility for. It's the biggest budget areas, healthcare and education. Both areas are languishing. So, we even at post payout, we could probably be getting more than we do if we actually collected royalties closer to the international average, and we could certainly be spending the money better on priorities that actually matched Albertans' priorities rather than the stuff that the UCP is spending it on.
What about the effective tax rate for the industry versus the national average? I gather that the Alberta industry rate is much lower.
Yeah, I mean, for Albertans who've been following along with the UCP, one of the first things that they did when they got into office was to dramatically decrease the rate of taxation on corporate profits. It's down to 8%, which is by far the lowest in the country. And so the effective tax on their profits is only about 14% in the oil and gas industry, largely thanks to this big tax cut from in terms of the provincial rate, and that's dramatically lower than the effective tax rate on average for every other industry in the country, which is more like 19%. So that spread between 14 and 19% would translate into literally billions of dollars of more revenue that once again could be spent if there was a desire, and I'm not sure that there is a desire with this government, but it would be available to be spent on the things that Albertans do prioritize, like healthcare, education, universities, colleges, infrastructure. So that's money that we're leaving on the table. I will point out that when the UCP dropped the rate of tax on corporate profits, down to the rate it is right now, they argued that it would spur investment, especially in oil and gas. But what we've seen is not just neutral. It's exactly the opposite. So they dropped the corporate tax rate just as the industry was moving into what I describe as a harvest phase. So instead of spending money, plowing money back into the industry, they were paying it out to investors, especially foreign investors south of the border, in terms of dividends and stock buybacks. And so basically, by dropping the corporate tax rate, we essentially subsidized this harvest phase, this move by the companies, especially the big four oil sands companies, to ship profits out of the province instead of having that money go back into development here or back into the pockets of Alberta workers.
Just let's pause there for a moment, Gil, because I think this needs a little bit of explanation. Many of our viewers won't be that familiar with the oil and gas industry or the oil sands industry. So what happens when oil sands are more like a manufacturing operation. You need lots of plant and industry,
Yeah.
roads and so on. So your capital costs are very, very high. Your operating costs are quite a bit lower. But when you expand, there are two ways to do it. One is greenfield, where you build more of that plant, and the other is brownfield, where you simply, you go to the edge of your current development and you then develop a little bit more of that and you use your existing plant. So that's a brownfield. And the industry, I think, lately has been expanding only in brownfield. It's not
Yeah.
expected to do much more, if any, greenfield. So that the point is, and you've made this point before, that the earlier boom was a construction boom. Well, all that
Yeah.
infrastructure, that is not coming back. So what we've got
Exactly.
here is maybe some incremental expansion, but the past boom is done, dusted, is gone.
Yeah, and that's a really important point, Markham, and it actually explains our interest in producing this report because we're a labor organization. We represent workers in the province, including people who work in oil and gas, oil sands, and oil sands related construction. And as a representative of thousands of those workers, I'm the first to acknowledge and celebrate what the oil sands in particular has meant for our economy and our workers. From 2004, when the price of oil first shot up, and then from 2004 to 2014, especially, it was a real boom year of boom decade of development, and we saw prosperity like we've never seen before. Every oil company in the world was beating a path to our door, projects one after the other. And as you said, it wasn't just an energy boom; it was a construction boom, and that drove our economy. But what we've seen is that the industry is now producing more oil than ever. They're setting production records. In between 21 and 2024, they set records in terms of profits. But they're making these profits and setting these production records with fewer workers. So if you look at the peak about 10 years ago, we had 175,000 people working in the industry. That's dropped by 30,000 now. So they're producing more with fewer people, and wages have stagnated. And as I said at the outset, the workers' share of the profits used to be about 50% of the profits went to dividends and stock buybacks for shareholders, and 50% went to workers. Now workers in the industry only getting 25%. I'm not sure people realize that, and that's why one of the reasons we produce this report was to say something important has changed in our economy. And as I've said in conversation with other reporters today, this report for us, reveals two important truths. And the first is that um, our most important industry, oil and gas, dominated by the oil sands, has moved into a sunset phase, and it will probably never again be the engine for investment, growth, or job creation that it once was. And then the second truth is that they're in harvest phase, and this may be the final harvest because there's no indication that they're going to go back into growth phase again. But in this final harvest, the benefits of that harvest are being disproportionately reaped by investors, especially foreign investors, not workers. And so for us, the whole impetus for this report was to follow the money. And the money is not going into the pockets of Albertans. It's not going into the pockets of Alberta workers. It's flowing. It's not just flowing out of the province. It's gushing out of the province in terms of billions. And so for us, the question is, this is a trend that seems to be established. And I think that what the oil companies are doing is different what they're saying, right? So they're saying that there's this big future, but what they're doing is suggesting that they see a point sometime soon where the music's going to stop, and instead of investing, they're cashing out. That's something that Albertans really have to get their heads around, and then ask themselves, what can we do to get the most out of this industry while we still have it? And then, just as importantly, what happens next?
Why then is Alberta Premier Danielle Smith singing the opposite tune? And only a couple of weeks ago, we had her she was sent a mandate letter to Energy Minister Brian Jean, and the mandate was double the Alberta oil production from 4 million barrels a day to 8 million barrels a day, and get 5 pipelines built, west, north, east, south, wherever. And
Yeah.
the growth narrative that the industry and the government promote all the time doesn't fit. It's not consistent with the energy trends we see, especially in Asia, but also in Europe to a great degree, where electrification is reducing the demand. We're just about pretty much plateaued for oil demand, peak oil demand. It's a couple of years away. Why is there discrepancy between what's happening and the narrative?
Well, I mean, if you want to know what industries are really thinking, pay attention to what they do, not what they say. And what they're doing is cashing out. And I think most investors would agree that companies don't make decisions about future investment based on current profits. They make those investments based on projections about future profitability. So I think what the big oil companies, including the big oil sands companies, are doing is they're looking at trends around the world, and they're actually seeing the same thing that you're seeing, Markham. And the same things that have been identified by forecasting agencies like the International Energy Agency, and even some of the big oil companies themselves. There is a consensus out there that we're reaching peak demand for oil. It could come in 2 years, 3 years, 4 years. It's not a question of if, but when, and it's going to be sooner rather than later. If the oil companies actually believed their own PR, and if they actually believed the rhetoric coming from their political proxies like Danielle Smith, they would be piling investment in, but they're not. And so look at their behavior, not their rhetoric, right? And so, as someone who represents workers in this province, I'm looking at their behavior, and the constraints are not pipeline capacity because we actually have spare pipeline capacity now, at least for a number of years. And there are other ways that we could, increase that pipeline capacity without building new pipelines. We could optimize the pipelines, all sorts. In fact, you've talked about that, and we agree. So the constraints are not regulations, they're pipelines, they're not woke politics. The constraints are that the world is, in its bumpy fashion, moving away from a reliance on fossil fuels. So, there was a column just today in the National Post from the president of the Canadian Association of Petroleum Producers, repeating this narrative about future growth and Alberta becoming an energy superpower. As someone, as an Albertan who represents workers in oil and gas, in some ways, I wish that would be true, but frankly, it's become more and more clear that's just a story. And stories don't pay the bills. Stories don't attract investment. And one of the reasons we published this report is to say that if we actually want to maintain our prosperity in a changing world, we have to do things differently, and if we have to be honest about ourselves about how the world is changing. And instead of trying to, wish away the change, it's better for us to prepare for it and try to find new ways for us to prosper and create jobs in a world that is demanding less of what we produce. So it's not about looking back and hoping we stay there. It's about looking forward and say, how can we prepare for the change?
I know I've got viewers who are saying, okay, come on, Gil, if why is there such a big discrepancy between the global trends that we're seeing and the narrative that we're seeing out of the Canadian oil industry? And I want to suggest one, and that is narrative props up stock prices.
Yes.
In this
Yes.
industry, you have
Yes.
to have a
Exactly.
growth narrative, or people vacate your stock, and your stock
Yeah.
collapses, and then your CEO gets fired, and on and on and on. So there's a very, very good reason why CAP and other, the companies and the premier are talking up the industry because they're talking up stock prices.
Yeah, and I couldn't agree with you more, Markham. I think you hit the nail right on the head. Oil companies and their proxies, whether it's Daniel Smith as Premier of Alberta or the President of the Canadian Association of Petroleum Producers, they have an interest in repeating this narrative about endless growth, uh, because if the future is not going to be one characterized by growth for demand, then stock prices will fall. And so, like, people always have to, like, when assessing someone's argument for its truth and veracity, you have to ask what are their interests. And in this case, the interest of the oil industry is to convince people that that there will not be a decline in demand, and that everything will be honky dory, and that the future will be the same as the past or even better, right? But what I'm saying, and what we're saying in this report, is that while that may be the interest of the oil companies, the interest of Albertans who own the resource and work in the industry is very different. So, this is definitely an example of what's good for big oil is not necessarily good for Albertans. And so that's why, we've one of the reasons we produced this report to say that what we're hearing from oil and gas and their political proxies like Daniel Smith is not really an accurate characterization of the challenges in front of us, and that if we want to maintain our prosperity and create jobs and put money in the pockets of Alberta workers, let's stop focusing on the industry sales pitch, which is self-interested, and I understand why they're doing it. But we actually have a conversation for ourselves about how to maintain our prosperity in a changing world. That's the conversation that we should be having, rather than a conversation about how to defend an industry that has entered sunset phase and which has interests that are different than ours.
Let's talk about the recommendations that the report makes. You've got four of them. Let's start with the first one, mission-driven industrial policy. What do you mean by that?
Well, that's the most important recommendation in the report, and it goes to the point that I was just making, that whether we like it or not, change is coming. The industry that has sustained our economy and provided so well for so many of us is not going to continue to be the same engine for growth, investment, and job creation that it once was. And it's not as if oil and gas is going to disappear, uh, but they have entered a mature phase, and I would argue a sunset phase. So the question is, what comes next? And when having those conversations about what comes next, what will be the next driver, that what will the next engine for growth or engines, right? And we have the point that I want to make is that even though oil and gas and the oil sands in particular are currently our biggest and most important industry, we can't let them drive the conversation about our future prosperity because their interests have diverged from ours. They're trying to cash out. They're trying to defend their stock prices. But we have to have a conversation about the transition and what's real. So we need an industrial policy that's led by Albertans for Albertans. And I just remind you, even the big so-called Alberta companies, Suncor, Cenovus, Imperial, Canadian Natural, they're majority American owned. So even if they have their headquarters in Calgary, that does not mean that they're at Team Alberta, okay? And so what we need is Albertans talking to Albertans about what are the most realistic economic prospects for the future. I actually think that, and you've talked about this, and you and I agree on this. Oil and gas will continue to be a big part of the solution, but we produced a report a couple of years ago. It was an economic blueprint called "Skate to Where the Puck is Going," and the puck is going to a lower carbon future. And oil, and so as the owners of the resource, Albertans have to say what can we use our resources for in a lower carbon future. And so that's why we're saying, and I know you've said this too, and we agree that we should pivot from using our petroleum resources, especially the oil sands, pivot from using them as feedstock for fuels to using them for feedstock for materials like carbon fiber. Like we could become the carbon fiber capital of the world. And by doing that, through government-led industrial policy, sort of like what Peter Lougheed did with petrochemicals 40 years ago, we could do the same thing with a materials industry, and we could create a demand for the resource that we collectively own. So we have an interest in making sure there's demand so we can collect royalties on it. But we also could create a manufacturing industry that doesn't exist here right now that could create high-paying, good union jobs, right? And so that's the kind of thing, that's the kind of thing that we should be talking about as part of an industrial strategy. But in order to get there, we have to recognize that we need to change, and that we need to find a new path. And as I said, that path should be discussed and determined by Albertans for Albertans.
I wanted to frame it like this, Gil. Right now, Alberta ships raw oil down to refineries in other countries. So
Yeah.
most of it goes to the US, but some of it goes to China, and more of it will be going to China as Trans Mountain expansion gets going at full speed. But what we're talking about here is going from creating foreign markets to creating a domestic market. So
Exactly.
and by using it for materials, you avoid the boom bust that has characterized oil for 125 years, and you get into materials, which is a manufacturing process and is much more stable and much more
Yeah.
profitable. Alberta Innovates thinks that you get 4 times the value out of a barrel of bitumen if you turn it into carbon fiber. So this is
Yeah.
not just driven by ideology, by climate policy, none of that. This is economics. We're burning our most valuable resource when we should be using it to make stuff with it. And so, but anyway,
And
that's
I would also point that there's a first mover advantage, right? And if we were to move now, we'd be moving into a new industry. And so in so many other cases we've been following, like with LNG, for example, we were way behind the curve and we couldn't catch up. Arguably, this round of petrochemical expansions, you could say we were behind the curve. We were following Saudi Arabia and other oil and gas producing jurisdictions who saw the value of moving to materials, like literally a decade ago. But moving towards becoming, the world capital for carbon fiber, that would be us taking advantage, seizing that first mover advantage. And like we've missed so many opportunities under successive conservative governments, who, always looking backward instead of forward. The last time we had a government that seized the moment, used the levers of the provincial government, it was Peter Lougheed. He used a mix of regulation, public ownership, investment, investment tax credits to partner with business to create an industry that wasn't there before, the petrochemical industry. And what we're saying is that we need that kind of that kind of vision updated for the 21st century. I think it's there. I think Albertans could get excited about it, but this narrative that we're getting from the government, it's basically the industry's narrative parroted through our politicians. It's not in our best interest, because the interests of the industry, as I said, are diverging from the interests of Albertans as citizens and also as owners of our resource.
Gil, we spent most of our time talking about recommendations, talking about industrial policy, which I think actually is good because that is the main driver of what Alberta should do. But let's very quickly go over the last three, which are review the royalty framework, restore the Alberta corporate income tax to 12%, create a permanent windfall profits tax. If you could just give us a brief overview of those.
Okay, well, I'll talk about all three together, and basically our thinking is that the report, which shows that the government, that the industry has pivoted from investment phase to a harvest phase, and which also shows that profits are disproportionately leaving the province as opposed to staying in the pockets of working Albertans. All of that shows us that that the conditions for what I describe as the social contract that Albertans have traditionally had with oil and gas, those conditions have changed. So, basically the unwritten deal that Albertans have had with the oil and gas industry for the last 50 years or so is that we will give you cheap access to our publicly owned resource, whether it's conventional oil and gas or oil sands. We'll give these companies low tax rates, we'll give them low royalties, and in exchange, we get jobs and economic activity, which drives our prosperity. But as our report shows, that the conditions for that social contract have changed dramatically. So these companies are making record profits, there's record production, but they're not plowing the profits back into development or jobs. And so if the conditions for the deal have changed, then we think the deal should change. And so and honestly, I'm not holding out hope that they're going to change, they're going to pivot back to creating lots of jobs. There's all sorts of reasons to believe that they've seen the writing on the wall. They're just trying to cash out as much as they can. And, that's a business decision. That's fine. But if the conditions of the deal have changed, then we should change the deal. And so that means, first focusing on an industrial policy where we can pivot to new opportunities in the future, which we just discussed. But it also means reconsidering what we've given them in terms of low taxes and low royalties. So that's why I think we should have a royalty review. And I know that's political anathema in Alberta, but if there was ever a time to review our royalties, it's when billions of dollars are literally flooding out of the province every year. And because that's our wealth, right? And it's going down to American investors instead of staying here in our province. And the second thing is, the corporate tax rate, the cut down, from 12% down to 8%. That was a giveaway. Just to be clear, I mean, it did not create, like, the evidence is clear. This is not disputable. It did not lead to more job creation. It did not lead to more investment. In fact, the opposite. It just helped, they just took the money and ran, literally. So there's no justification for us having such a low tax on corporate profits compared to other provinces. That should return to the Canadian average. And then the final point about a windfall profits tax. We should put one in place. I don't know if the price of oil will ever go back up again, but if it does, we saw what happened between 21 and 2024. The industry reaped huge, huge profits, frankly, often at the expense of ordinary Canadians, including Albertans, because they used the pretext. They used the shock of the war in Ukraine and the pandemic as a pretext to jack up prices at the pump, and so they ripped off consumers, right, to the tune of billions and billions of dollars. That money went to into the pockets of investors, mostly American investors, and everyone else paid the price for that. So not only should we as the public reap some of those higher profits, but by having a windfall profits tax, it actually acts as a brake and a discouragement on companies from price gouging, right? And which is obviously something that most people would support during a period during an affordability crisis. So for all those reasons, we think that we should introduce a windfall profits tax, return our corporate tax and corporate profits to the Canadian average, and have a royalty review as well.
Gil, this is going to be a controversial report, and I'm looking forward
Yeah.
to seeing what our viewers think about it. I'll provide a link in the description where you can go and read it at length if you'd like. But thank you very much for doing this.
Well, it's my pleasure. Thanks very much. It's always good talking to you, Markham.